Please subscribe to the channel and press the bell icon to be notified of the latest videos. I'm Sage for kalkinemedia. Thanks for joining us on our trending topic. Today we're covering 7 ASX listed stocks to consider before September ends. And even as September nears its end, leaving yet another earnings season firmly behind us, it's not a bad time to pick up some of the positively inclined ASX listed stocks. The shares range from air travel stocks to technology companies. So here are 7 ASX listed stocks for September that have been selected based on the positive developments around them. Credit Corp Group. An Australian debt buyer, Credit Corp Group operates in both the US and Australia, with its lending divisions in both New Zealand and Australia. And Credit Corp started financial year 22 on a strong note with an all-time high July contracted purchasing pipeline. The company also reported growth in a month-on-month charge of volumes. Fineos Corp Holdings plc. Fineos provides software solutions to the employee benefits, life, accident and health industry. And according to the leading analysts, the company is adequately funded after its latest capital raising round and may be on the lookout for potential businesses to purchase. Qantas Airways Limited. With the government focusing aggressively on its vaccination program, travel stocks are likely in for brighter days ahead as air travel related restrictions are expected to be lifted soon. And the company reported 386 million Australian dollars of negative cash flow in financial year 21 due to the coronavirus pandemic induced restrictions. And the stock price has also surged recently on optimism of recovery in the air travel industry as the Freedom Day closes in. Flight Centre Travel Group. The stock price of the Australian travel agency Flight Centre Travel recovered in Monday's session, hitting a 52-week high. And similar to Qantas, the company has talked about a visible pickup in momentum in its 2021 annual report. And the company now plans to invest to win over a larger market share and gain further competitive advantage. NextDC Limited. NextDC is a leading data centre operator, and the company has benefited immensely from the recent boom in the cloud computing market and greater demand for services during the pandemic. In financial year 21, the company reported a 23% rise in revenue to 246.1 million Australian dollars. VanEck Video Gaming and Esports ETF. The VanEck Video Gaming and Esports ETF, or Exchange Traded Fund, gives investors exposure to the largest and most liquid companies involved in video game development, esports and related hardware and software globally. And there are 26 stocks in the portfolio. These include Nvidia, Advanced Micro Devices, Tencent and Unity Software. Only the companies generating at least 50% of revenue from the video gaming sector can qualify to be part of this ETF. Megaport Limited. Megaport is a prominent network as a service, or NaaS provider. It reported a 35% increase in revenue to 78.3 million Australian dollars. Its strong earnings came on the back of expansion of the company's data centre footprint, customer and ports growth and strong demand for Megaport Cloud Router. The company became EBITDA break-even in June, thanks to factors like increasing multi-cloud adoption, wider distribution of infrastructure and computing services, and swift digitisation. Analysts expect the company to grow its revenue at a rapid rate over the next 3 years. And thanks for joining us in the report. Now, if you do like this information, please like, share, comment on the video below, and subscribe to the channel. Press the bell icon, you'll be notified of Kalkine's latest videos. But for more info, regular updates, head to the website. It's kalkinemedia.com. And my name's Sage for Kalkine.